Hey everyone, John Henry here from School of Trade, and today we're going to be taking a look at tape reading. Now, there's a lot of different tools that we can use for tape reading, whether it's the time and sales window, the level 2 GOMI delta volume, the standard GOMI ladder. There's all kinds of different things at our disposal when it comes to looking at tape reading. But let's take a step back really quick. What is tape reading? Well, tape reading is a way that we can use the time and sales window or the level 2 or whatever tool we're using to look at the orders coming into the market as clues for buying and selling opportunities. So what we're going to be looking for when we're reading the tape is we always want to read the tape around points of interest in the market. We don't want to just read the tape in the middle of nowhere. That doesn't really help us. We need to be looking at the tape in specific areas, whether it's inside your trigger zone or at the high of day or where you're already looking to be buying or selling from another pattern, something like that. You want to use it in conjunction with that. You want to look for more buyers and sellers for support to hold. You want to look for more sellers and buyers for resistance, that kind of stuff. Now, in terms of using some of the other things, as an example, the level 2, you want to look for large orders or more important orders, the big boys, rather than the small orders. The small orders are folks like you and I putting in 3, 4, 5 contracts. It doesn't really move the market a whole lot. What we really need to do is just keep an eye on the actual market orders that actually move the market. 100, 200, 300 contracts on gold and crude oil, or in an example on the S&P 500, something in the order of 2,000, 3,000 orders, big block orders. So you want to keep an eye on the difference between large and small orders. Now, along with that, there's, just as an example to show you what I'm talking about, it's kind of difficult right now because there's not a whole lot to work with, but you want to be looking for something where you've got a normal order of 7, 5, those are small orders. Now, this is later in the day, so bigger orders are a little harder to come by, but as an example, you've got 23 right here. That one sticks out a little more than some of these little small guys. Now, if you were to see an order of, as an example like we saw earlier today on crude oil, 500 contracts sitting at one of these levels, well, I want to be paying attention to what happens at that level. That's an area of interest now because I know we've got a huge amount of buyers or sellers in that area. That's the kind of stuff you want to keep an eye on. Now, in terms of the time and sales, which I've got right here, this is a way that you can see the orders physically coming into the market. Now, the level 2 down here, that's going to show you the orders before they're in the market. This shows you after they've been executed. Now, that also goes for the GOMI volume ladder behind here, as well as the GOMI delta divergence over here as well. Those are after the trades have already taken place. So you can use them in conjunction with each other in a sense where if you see, as an example, down here in the level 2, you see an order for 400 come in. Well, when that order gets executed, I want to immediately jump right over to my time and sales, to my GOM volume ladder, and I want to see what happens, how many of those orders were actually executed on that level, if there was any slippage, if there was movement after that. You can track all of that different kind of stuff using all of these different tools. Now, one really cool thing about the level 2 in this order flow kind of mentality is that recent changes at the CME now allow us to use the level 2 in a very effective manner because they recently changed the concept of iceberg orders where you're not allowed to place iceberg orders anymore. So in that sense, we're basically seeing the actual orders coming in without any manipulation to the size of that order. And we can use that to our advantage, looking at big buys, big sells, whatever it is, we can look at those and kind of get a forward clue as to what's happening in the markets. Now, I did a couple videos a while back, as well as a few from JJ, that go over tape reading. So we go over a different type of tape reading strategy for new traders, and I've got the link right up here for you. I'll post that underneath the video if you want to go to it. And then we also went over a video on the GOMI. So going a little bit more in depth on the GOMI, what you need to do, how to set it up, all of that. Those 2 links can be found underneath this video, as well as right on sidewaysmarkets.com, our main blog. So all of that information is readily available for everyone if you want to check it out. But for the most part, order flow is it's a key element in any type of trading. You can utilize it in any type of trading that you use, whether you're trading pullbacks, breakouts, whatever it is, it's good to be looking at. It helps you out in a lot of different ways, and it gives you kind of a forewarning if, as an example, you're going to be buying into a block of 500 sells. So it's just kind of a heads up for you, but it also gives you an insight into what's actually making the market tick. Pardon the bad pun. So that's going to be taking a look at order flow. If you have any questions about it, feel free to send an email to School of Trade. We'll be sure to get back to you as soon as we can. Have a good one. Bye.